Okay, so I got a lot of questions from my friends asking me whether I should buy oil or not. Okay, because oil is actually trading at a price that is extremely unreasonable. Okay, and the market actually acting very irrational. Okay, for the next few months we can expect the price actually will drop further, is because the oil demand will actually drop. Okay, and because um, Saudi is not cutting down. Okay, it's not cutting down their productions. Okay, so they are actually ramping up their production to actually to drop the price further, to actually to get more market share. Okay, so how can we actually benefit, okay, from the current situation, the current market condition? Because a lot of opportunity right now. I know a lot of people want to buy stock, want to buy Genting, want to buy this, buy that. But yes, hold on, hold your horses. Okay, we need to do something first. Okay, which is more important. Okay, I would call it risk management. We need to calculate our risk. Okay, because we can't just buy it randomly. Okay, we just can't buy any stock randomly, because we don't buy, if we don't buy at the right price, we will not make money. Doesn't matter, it doesn't matter where the price go. Okay, so the first thing I want to tell you is that please do not buy oil stock, because we know that the only person that will make money and profit from all this he hu he hala hola is Saudi oil. Okay, only Saudi oil can profit. Okay, because their production cost is actually lower. Okay, their production cost is around $20, if I'm not mistaken. I'm not sure how low is their cost, but what I know is around that price, and at $50 they're actually making a lot of money. Okay, so what I what we know is that the reasonable price for oil is actually around $50. Okay, it could be 40, 50, but it doesn't matter, it will be around that price. Okay, but what we can do is that please do not invest in oil stock, because for those oil company in Malaysia, especially Sapura Kenjana or any other company, you can call it Hibiscus lah, other company, they'll go bankrupt because their production cost is very very high, especially for Hibiscus. Okay, Hibiscus cost I think around 50 something. Okay, so at $60 they can make some money. Okay, maybe $5 per $5 per barrel, they will make some money. But then after that, they're not gonna make money. Okay, they'll lose money. So please do not invest in oil stock, because their risk of bankruptcy is very high. Imagine that the oil price drop for another 1 year. Okay, uh, and then sustain at around $20 per barrel. Okay, for the next 1 year. Okay, maybe 2 years, all this company in Malaysia is gonna be gone. Okay, they are all gonna be disappear. Okay, so please do not buy. I'm going to give you one example, because I did that. Okay, I bought Sapura Kenjana last year, 2019, around January I think to February. So I bought oil stocks. Okay, I bought Sapura Kenjana. So the price, okay, we go back to, okay, so the price was actually hovering around this box area. Okay, so dropped to 40 something, and then later on it went down to 60. But Sapura Kenjana didn't really go up that much. Okay, if you look at oil, it has actually gone up more than 50%. Okay, but for Sapura Kenjana, because people are quite pessimistic about the company, so I bought around 0.29. Okay, and then price went up to 0.35. I didn't really take profit, because the price is actually was actually going up. Okay, but it went up for a while, and then it dropped. Okay, but the oil price also keep continue up, but the price of Sapura Kenjana didn't go up. Okay, there were no reaction. Okay, so in the end, decided to cut my loss. Okay, because Sapura Kenjana did not benefit a lot from this oil price. Okay, uh, going up. So we took our loss, and then we just move on. Okay, so what we learned is that no, we'll never invest in oil stock, because oil stock has other factor to consider, some like bankruptcy risk, like their industry lah, like a lot more. Okay, that we need to consider. So we need to remove all these factors. Okay, because you don't know they have enough cash flow or not, or maybe they have enough engineer to run the business or not. We do not want to know all this nonsense. Okay, what you need to do is to eliminate all these variables. Okay, and then invest in something that is very very simple to understand, and then following the market, that's following the market. Okay, we can get that if the oil price recover, this will be something that you can benefit immediately. So this is what we want. Okay, so what I recommend is that you invest in oil CFD. Okay, so I have this forex account. Okay, this is actually CFD. It's the same thing wherever you, it doesn't matter which broker you use it. Okay, the concept is you invest in CFD because CFD allow you to invest smaller amount of money. Okay, use very very small capital, and then you can actually benefit from the oil price going up. Okay, so if you were to invest in oil future, okay, one future is like you need a lot of money. Okay, I do not know how much, but then it's way more than you imagine. You have to buy per barrel, okay, of a future. That's gonna be a lot of money. We don't know how much, but then what we know is that we get leverage in CFD and forex, and then this is what we want to go about. So I actually roughly calculated uh, the the price, okay, that we want to enter, and then the strategy that we exit, okay, and then the profit potential, okay, for you. So look at this. So our current price for oil right now is actually $23. Okay, so this is a current strategy that you should use it if you want to do it. Okay, I might consider doing it. Okay, I'm thinking. Okay, I'll monitor. Okay, and then I'll do it. Okay, might do it. Okay, okay, very high possibility that I will do it. Okay, um, because right now you see oil price. Okay, okay, so you have two options. Okay, your option number one is actually to buy oil at $20, $10, and $5. Okay, but the two options, the difference between these two options is just position sizing. Okay, for option number one, your position size is 0.01. Okay, the second trade is 0.02, and the third trade is actually 0.04. For option number two is 0.01, 0.01, 0.01, all the same. Okay, all the same. So um so so you can choose whatever risk that you want. Okay, later on we actually can calculate. Okay, the first one, okay, the first trade. Okay, this is okay, the first one, if you were to use 0.01, okay, the trade go against you for 10 from $10. Okay, imagine from sorry, $20, okay, to $5. You float $150 per 0.01. Okay, for 0.01, so this is 1500 pips. Okay, you multiply by 0.01 is 150. Okay, second trade will be 100. Okay, so current price, that price, okay, when you were floating 250, the price will be around at $5, which is quite impossible. Okay, which is quite impossible. So you can actually invest $250 to $300. Okay, just in case. Okay, just in case you really need more money, then you deposit a little bit more. So because I need to do comparison for you, so that's why we use $500. So for this one, it's a low risk options. Okay, low risk options. Okay, so your balance left. Okay, if price were to drop to $5, you have $250 left. So for every drop of $1, you actually float $70. Okay, so you actually get margin call at $5. Okay, no, sorry, this one is wrong. This is $30. Yep, this one is 70. I think just now is because I copy. Yep, margin call at so USD 0. Sorry, just now Okay, sorry about that. 70. Okay, so for every drop of $1 per barrel, you float additional $3. So you'll get margin call if the price drop to -5 because you have 200, you have 250, you have 250. Okay, so $7, okay, $5, $7 is what, -2, so you still got a lot of money. Okay, so this is impossible. Okay, for this one you won't. For option number one, if you were to deposit $500 and then you buy at 0.01, 0.01, 0.1, you will never get margin call. This is what I mean. Okay, for option so for option number two, okay, um because this is high risk. Okay, oh my god, how come it's like this? Yep, just now I think it's because of this. I copy something and then got. It's okay. No worries. Okay, so this one 150. You have 150 left. Okay, okay. This is just simple maths. Okay, you can do yourself. Okay, so USD 150. Okay, first trade USD 150. Second trade is 100. Okay, because your position size from 0.01 up to 0.02, so it's double. So total floating 250 if the price of US dollar oil per barrel is $5. Okay, so $5 US dollar $250, you invest $500. So for every, okay, so you add up. Okay, you add up. Okay, 1 2 3. Okay, so that's how you get $70. Okay, because for every 1 pip is 10 cents. So for our case here, 100 what USD 100 is actually equivalent to 100 pips, so it's $70. So for every 70 pips to 70, so for every drop of one US dollars, okay, you will float additional $70. So this is close to margin call already. So this one, okay, this one is you get another $40. You can actually drop another $4 from USD 5. So I write a margin call at $2, so easier. So this is also quite impossible. Okay, for you, even if you do martingale. Okay, you see you do double up. Okay, this one also quite impossible already. Okay, so USD 500 seems to be the optimal capital that we need for this investment. Okay, so for option number one, your profit potential will be 1,150. Okay, because your trade size, for trade number one, you make 3,000 pips. Trade number two, you make 4,000 pips. Trade number three, you make 4,500 pips. Okay, so it's 300, 400, and 450. Okay, so how do I calculate? So 300 pips is actually from the $20 to go up to $50 per barrel. Okay, so the difference is $30. So $30 is 3,000 pips. 3,000 pips, 0.01 is 300. Okay, so your profit, but if you take profit, you will take profit at $50, you make 1,150. Okay, for option number two. Okay, for option number two, you make more money. It's because this is because you invest more. Okay, so trade one, number one, okay, you make 300. Trade number two, you make 400. Okay, because you double up. You see, at $50, you make $2,900 for 500 US dollar investment. So for 500 US dollar investment, okay, you can make 12,000 ringgit. Okay, you will take profit at $50 per barrel. Okay, this one do not need to consider the economic factors or all that shit. Okay, as long as the market recover and the price go up to $40 to $50, okay, you make a lot of money. So during that time you take profit. That will probably take at least 1 to 2 years. We don't know how long that we might take. Okay, so just hold it and be disciplined. Okay, this is your trading plan. Okay, just copy it down. Okay, and you see it every single day. So you make sure that you'll be extremely disciplined. You just need to be right once, okay? You just really need to be right once. You don't need to be right all the time, okay? If you get it right, okay, do it properly, do it according to our risk management plan here, you get the reward that you want, okay? So that's all I want to share today, okay? I'll see you in another video. Goodbye.